In recent conflicts across Ukraine and the Middle East, military doctrine has pivoted sharply. Multi-million-dollar fighter jets are sitting on runways, while cheap, autonomous drones and the counter-systems designed to shoot them down dominate the airspace. These attritable systems are now the center of gravity in modern warfare. That reality on the ground has triggered a massive financial tailwind in Washington. The Pentagon is currently pushing for a $1.5 trillion defense budget by fiscal 2027 and exploring a reported $1.1 billion drone dominance initiative, specifically targeting low-cost attack systems. That exact pool of capital is what Ondas Inc. is chasing. Just a few years ago, Ondas was a niche industrial wireless company, but fueled by an opportunistic $1 billion stock offering in January 2026, they have rapidly attempted to buy their way into becoming a multi-platform defense technology player. To see the velocity of this pivot, we have to look at this chart tracking their recent quarter. First, you have Q1 2026 revenue exploding tenfold year over year. Next to it, their pro forma backlog rockets up to $457 million. And underneath it all sits a $1.48 billion cash war chest with zero long-term debt. Despite those numbers, Ondas is currently sustaining heavy operating losses. Consolidated profitability remains years away, and the stock carries a price-to-sales multiple north of 50. This disconnect has fueled a volatile, retail-driven narrative, recently culminating in Jim Cramer publicly dismissing the company as a meme stock. We are left with a contradiction. Ondas is either a perfectly timed, well-capitalized attempt to leapfrog into the future of military technology, or a bloated, heavily diluted roll-up destined to collapse under its own valuation. Traditional defense contractors spent decades iterating on a single weapon system. But Ondas is currently taking the exact opposite approach. They are using their massive cash reserves to instantly purchase a fully formed ecosystem across almost every domain of warfare. They acquired Optimus to secure FAA-certified drone-in-a-box operations. They bought Centrix to build out their counter-drone defenses, and they acquired Worldview for stratospheric surveillance. To round it out, they acquired Roboteam, giving them immediate access to tactical ground combat vehicles. But hardware needs a buyer. So in April 2026, Ondas executed a $175 million merger with Mistral. This was a critical structural move. It elevated Ondas from a commercial vendor to a direct prime contractor, granting them immediate access to massive U.S. Army and Special Operations procurement vehicles. Having the hardware and the contracts still leaves one problem: making the machines talk to each other. Ondas's ultimate target is software. By integrating the AI platform ONDS and partnering with Palantir to leverage their Skyweaver technology, Ondas is attempting to build the brain of the operation. This orchestration layer recently debuted as Leidos, a command and control system built specifically to tie all of those newly acquired ground robots, interceptor drones, and radar systems into one single operational interface. The ambition is to move the company beyond selling individual hardware components. By placing this software layer on top, management is betting they can eventually shift the business toward the higher margins and recurring revenue associated with defense software primes. However, executing that complex vision requires flawless management, and right now, Ondas is staring down a massive integration bottleneck. The company bought 5 distinct businesses in the first quarter of 2026 alone, meaning they now have to synthesize operations, cultures, and tech stacks across more than a dozen disparate entities. As this seesaw diagram illustrates, the capital structure actively works against retail shareholders. That $1.48 billion cash pile was bought with severe dilution. The stock is currently weighed down by a $1.1 billion warrant liability and ongoing resale registrations that constantly introduce new tradable supply. Adding to the structural pressure is the behavior of the executive team. While CEO Eric Brock's recent sale of over 2.3 million shares was strictly to cover tax obligations, there is a total absence of open market insider buying. Management holds large stakes, but they are consistently taking liquidity into strength rather than buying more. But then there is the overarching geopolitical reality. Ondas relies heavily on newly acquired Israeli subsidiaries like Roboteam, Omnisys, and Centriax. This creates a geographic concentration, exposing the company to regional conflict disruptions and potential friction in certain international export markets. This split picture, explosive top-line growth offset by massive structural risk, is exactly why roughly 30% of the float has recently been shorted. The market is questioning whether management can stitch 12 companies together before the cash burn catches up to them. To accurately price that risk, we have to look at the drone defense landscape. At the top end, you have Kratos, a scaled billion-dollar platform builder with massive programs of record. At the bottom, you have thin-margined, small-cap rivals like Red Cat fighting for tactical drone budgets. The ultimate proxy for Ondas is AeroVironment. They offer the exact same macro bet on small drones and counter-UAS, but inside a mature company that actually generates positive operating cash flow. While Ondas holds significantly more cash than its small-cap peers, its valuation is currently detached from its earnings. Their sky-high multiples dwarf even AeroVironment's premium pricing, which means the market has already factored flawless execution into the Ondas stock price. They have a massive catalyst approaching. On January 1, 2027, new U.S. defense procurement rules will officially ban the military from using Chinese-made drone components. That creates a vacuum in the supply chain that domestically integrated suppliers like Ondas are positioned to fill. To survive long enough to see that money, management has set strict benchmarks. They have to hit their raised revenue target of $390 million for 2026, and they must reach company-wide EBITDA profitability by the first quarter of 2028. Ondas has placed its capital exactly where the $1.5 trillion defense market is going. If they manage to force 12 distinct companies to work as one, they will have essentially bypassed the multi-decade development timeline for new defense contractors. But if that integration stalls, their meme stock valuation leaves an enormous distance to fall.